How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. As of today, we're sitting at $75,014.41. We're down by $1,516.55 from my last video after an incredibly volatile week last week with pandemic era stimulus coming to its end, which is creating a lot of volatility in market fears. Of course, we have lingering fears with the Evergrande crisis, and last but not least, Congress being unable to agree on just about anything at all. That is nothing new, but it all leads me to today's video because these days in red are opportunities to buy stocks on sale, especially for the long-term investor when it comes to picking high quality stocks. So in today's video, I want to talk about 5 high quality stocks that you can get invested in October and just hold on to these companies for the long run. So just before we dive in, as always, go ahead, tap on that thumbs up button as it greatly helps me out in growing this channel. If you haven't already subscribed, tap on that subscribe button while you're at it. I not only want each and every one of you along for this ride with me, but I want all of you taking advantage of the $50 One Hope Wines gift card giveaway I have underway right now, in which one lucky winner, the moment this channel crosses 1,000 subscribers, will be selected and sent that gift card to pick out the wine of their choice. So cheers to that. Now YouTube, let's go ahead and dive right in. So right off the bat, I want to let you all know that the companies I'm about to mention are not necessarily new companies that you've never heard of. They're actually dominant players within their industry, making them quality investments for the long-term investor like myself. And with that being said, I want to kick us off with Target. That's ticker symbol TGT. Now, Target is a retail corporation, and since their founding back in 1902, they have done an outstanding job in ensuring they became a dominant player within the industry. As of right now, they are the 8th largest retailer within the United States, and of course, they are only going to continue to grow and expand and dominate their industry. Now, they have made today's list simply for 2 reasons. The first of which is they are a dividend king. That means they've been paying out dividends for over 50 consecutive years and increasing that dividend year over year, not to mention their current dividend yield is sitting at 1.53%. But the second reason is because they have entered a correction mode. Now, throughout the last 12 months, they have hit record highs at a share price of around $267 per share. However, they have since then dropped to around $230 per share, which makes a great opportunity for all of us to get invested into Target, especially with the holiday season right around the corner. Now, it's my projections that because the holiday season is right around the corner, Target is well poised to not only rebound, but surge right past those record highs of $267 per share. Not to mention, they recently announced an investment of $4 billion in which they're going to deploy over the next few years to remodel their stores and continue to grow their online presence. And of course, they're right now well poised for share buybacks. But in the best possible news, analysts are only expecting Target to continue to grow, coming in at a median stock share price of $281 and a high stock share price of $337, making Target a fantastic buy opportunity here in the month of October. Next up, we not only have a beloved American fast food chain, but we have a fast food chain that has become a global icon since its founding in 1955, that being McDonald's, ticker symbol MCD. Now, Mr. Ronald McDonald has been doing an excellent job at growing this company on a global scale. And of course, while it may not have pulled back as much as some of the other companies that we're going to talk about today, the reason it has made the list is simply because during times of volatility, McDonald's stability as well as reliability is exactly the type of play that every investor should be thinking about getting invested in, and of course just collecting on those dividends as they come. Now, when it comes to McDonald's dividends, they've been paying them out for 45 consecutive years, making them a dividend aristocrat. Now, year over year, they have been growing that dividend. As it currently stands, that dividend yield is at 2.11%, and it's well worth noting that McDonald's has been investing in renovating renovating all of their restaurants. They have been undergoing menu innovation, and last but not least, growing an online presence, as which right now it is up 70% year over year, which all leads analysts to believing that McDonald's is only going to continue to grow, coming in at a median stock share price of $269.50 per share and a high stock share price of $295 per share. Now, moving right along to the third stock opportunity of the day, we have Lockheed Martin, that's ticker symbol LMT. Now, Lockheed Martin is a company that a lot of dividend investors have been talking about rather recently, and a lot of investors in general, as I see it on YouTube. And it is well worth noting that very similarly to Target, Lockheed Martin is experiencing a correction mode, again making it an opportune time to get invested into a high quality company like this one. Now, when it comes to Lockheed Martin, you have to understand that they're not just your average aerospace, defense, and information security technology company. Lockheed Martin has worldwide interest. They are contracted with the US government as well as governments around the world, making Lockheed Martin an incredibly safe and reliable company to invest in for any and all investors. Now, when it comes to their current stock share price, they're hovering around $345 per share, whereas they were once trading for $397 per share, which is exactly the type of opportunity that I want to get invested in and just be able to ride that wave back on its upward trajectory. Now, a lot of investors were spooked because they thought that Lockheed Martin was going to be troubled by the supply chain disruption, which of course they did experience some trouble. However, that turbulence is not going to last long. And a matter of fact, the proof is in the pudding because they have about $140 billion worth of backlog orders. Again, just an incredibly safe play. Now, when it comes to Lockheed Martin's dividend, they have 18 years worth of consecutive dividend payments and dividend increases. They're well on their way to establishing themselves as a dividend aristocrat, which is exactly what I want to see. Their current dividend yield is sitting at 2.97%. And in all honesty, I may very well be trading my stocks in Boeing for stocks of Lockheed Martin. Now, when it comes to analyst expectations, this is what I absolutely love to see. Because analysts are only expecting Lockheed Martin to continue to grow at a median stock share price of $427 per share and a high stock share price of $458 per share, making it an opportune time to get invested in Lockheed Martin. Next up is the opportunity for you to get invested into real estate by way of investing in a REIT, a real estate investment trust, that being STOR Capital, ticker symbol STOR. Now, STOR Capital is Warren Buffett's go-to real estate investment trust to invest in, which should certainly deliver you with some more confidence to invest in it. It was founded back in 2011, so a relatively young REIT, but nonetheless a powerhouse that is becoming a dominant player within the industry. As of right now, they have 2,587 properties spanning across the United States, with over 500 tenants in those properties. Now, in full disclosure, STOR Capital didn't necessarily make today's list because they've seen some massive pullback. A matter of fact, they've only pulled back roughly by a few dollars. However, they made today's list because of the exponential growth that I truly believe lies ahead of them. They have a lot of properties that are fit for the restaurant business, movie theaters, health clubs, as well as educational facilities, which you all know have taken a massive hit during 2020 and up until this point in time. But because we are on an economic rebound, I am only foreseeing continued growth when it comes to STOR Capital's portfolio. And a matter of fact, they are too. They've spent over $600 million in acquisitions during the past 12 months, gearing up for the years to come, which gives me a ton of confidence to double down on my position with STOR Capital. Now, as of right now, that dividend yield of theirs is sitting at 4.71%. Of course, right in that sweet spot of a dividend investment that I'd like to get invested in. Analysts only have expectations that STOR Capital is poised to grow as well, coming in at a median stock share price of $37 per share and a high stock share price of $42 per share. And last but not least, we have the opportunity to get invested in an incredible healthcare play. It was a spinoff of Abbott Laboratories back in 2013. That opportunity falls with ABBVIE, ticker symbol ABBV. ABBVIE has certainly experienced a pullback. It dropped from $120 per share all the way down to $109 per share with all of this government regulation on pharmaceuticals. Not to mention they have one of their leading drugs which is bound to expire in terms of that patent of theirs. However, they have two more leading drugs up their sleeves, so I'm not worried whatsoever about ABBVIE. Now, when it comes to their dividend, they've been paying those dividends out for 49 consecutive years and increasing those dividends year over year, just about to make themselves on that elite list of dividend kings. As of right now, that dividend yield is sitting at 4.78%, and analysts only have expectations for ABBVIE that it's not only going to rebound but surge right past the record highs, coming in at a median stock share price of $129 per share and a high stock share price of $148 per share, making ABBVIE an incredible opportunity to get invested in during the month of October. Now, that is it. Those are the 5 high-quality dividend stock opportunities that I believe are ripe for picking and adding to your portfolio during the month of October. Now, if you liked what you heard, you learned something new, definitely go ahead, tap on that thumbs up button, as it greatly helps me out in growing the Blue Lion Finance channel. Drop those comments below on your thoughts of any of these 5 companies. I'd absolutely love to know. Make sure you do your own due diligence prior to investing in any of them, because of course I am not a financial advisor. Now, if you haven't already subscribed, just go ahead, do yourself a favor, tap on that subscribe button while you're at it. And until the next video, YouTube, I will see you all there.